Good afternoon, everyone, and thank you so much for having me. I think if I was going to actually ask by a show of hands, how many of us here have lent money to your friends, family? Could you, colleague, everybody? How many of you have had that money not paid back? I think that actually gives us the story that we are here to solve. I will tell you the truth that you guys are among the richest people in Nigeria because you guys are the one contributing to the over $119 million of annual peer-to-peer lending that takes effect. So please give yourself a round of applause. Among the rich guys. The urgent 2Ks, the 10K, the 30K, all make up for that. And you are among the largest market of credit providers in Nigeria. Actually, peer-to-peer lending or funding, anyway you put it, contributes to over 70% of the credit activity that happens in Nigeria. To small businesses, to salary earners, to a friend, to a student, a colleague at work, all of them actually contribute to that. And out of that 70%, I'm sorry you all raised up your hand, 80% of them go to default. Some of them jackpot with it. Another set jackpot again. And the other set go missing. And that is where Yemaka comes in. Yemaka actually was coined from a nice short form of Igbo clause which says, help me. The N is missing. Don't ask me where it is. Yeah, next slide. So in 2020, my partner and I actually we call it a pandemic baby. I'm sure a lot of us have one of these pandemic baby, whereby we had a bit of funds in our hands and we understood whereby at that time we were building a product, actually. Another product, but that one, it died. A natural death. And in that product, we discovered we were also having credit issue. And who are those that helped us? Our friends, our family. And then we thought about why don't we also get into this business of helping people who are actually in need. It was our own funds, so we started with our own funds. The first loan we gave was 50,000 naira. I still, anytime I speak to the lady today, I'm like, now you be the first person we open them up. And we found out that we were actually able to help. And that's actually where the name came from. And secondly, we also found out that we were able to actually then grow to get people to trust us, to give the funds, whereby when you want to lend to your friend, instead of you going to straight to your friend, he or she will not pay. So you then actually then come to Yemaka, and Yemaka then becomes that security. And so far, we've actually gotten to record a very good number of return to all our lenders, and also potential, and also I'll call them more fixed deposit lenders, because we do have two categories of lenders: the recurrent and then the fixed deposit. The problem we're trying to solve the issue of credit access to salary earners, and small business owners, whereby we are actually having a very, very huge dilemma that these set of people do not actually have access to credit, even though having a good source of income. And also, the traditional spaces of finance, banks and the rest, did not have that small product to cater for them. They want to actually give money to the big corporates and also the big guys. And there is the problem we are trying to solve. And also, we're also catering to another segment, the lenders, who want to actually lend to a friend, but is worried about the friend actually not paying back. Who want to lend to a brother, because our brothers and sisters, they come to us, please borrow us money, after they're gone. And that's it. So we're also catering to that customer, because they are actually the main credit provider, like I said, the biggest credit providers in the country compared to any financial institution. Like I already mentioned, the traditional banks not solving it, microfinance bank, friends and friends always having a problem of repayment. So they are also always skeptic, even though we all want to be help, but also the skeptic. Yemaka then provides that solution. Our solution, like we said, first it starts from the willing lender, who then meets a willing borrower. And then other activities, just like I already mentioned. And then we're introducing one other aspect in our product that we do not actually see in anybody: community. Community strength is one that we do not actually always get harnessed so much well in this part of the world. In the global space, the crowdfunding platform, which actually became a big phenomenon, especially during the pandemic period, whereby GoFundMe, GoFundMe, GoFundMe. And we're also forgetting that we have our own, the Esusu or Ajo, as you call it, in our own different dialects, whereby our own small community come together to actually get to help the next person, next person, and all that. But we want to also integrate that aspect that also bring community together and provide them that wallet that they need and to contribute and how to meet a goal, meet an objective, or help a friend, medical or any reason. That is also one feature that we're also going to put in and giving them the security. Just a sneak peek of what the app. We have been doing this business for the past 3 years, 2022, 2023, and now in 2024. And I would say from 2020, 2021, but I would say those are actually the formative years. So I do not want to call that our own main operational year. What we also want to use is that we now want to automate the process that we already have with our product. We want to automate the process. This is the next slide. Currently, we have also met, these are our numbers about lenders always coming back, 100% lenders coming back. We also have our borrowers who have been able to maintain a 1% default rate year on year in the past 2 years. And also our lenders also get a return of over 30%, minimum average of 30% return every investment.
Per investment or
per year? Per year. Yeah. Per investment, brother. If you see it, please come. Our income model, interest from the loans, commission on fees of recovery, management fee, and also penalties on default. We're not the only one trying to solve this problem. So I'll tell you, it's a lie if I tell you we're the only one. However, we compared ourselves with Kia, Think, very two big players. And we also got to mark ourselves. We brought in a feature that banks only offer to corporate. That is moratorium payment. Nobody else have actually offered that. We only interest free whereby, as a business, sometimes you want the funds to buy a goods, and then in 2-3 months you get to pay, you get to see the return of that fund. But most institutions just want to start paying immediately. But you have not used the money yet. And that is one thing we have also brought in. And then also the community building, just like I also mentioned earlier. 2022 to 2023, these are our numbers, over $52,000. Very small, we're not yet big. And then average gross income monthly of $223 per month, or served over 182 loans service, and also over 14 lenders on our platform on a rolling basis. Just 2 members founder team, and then we also have our part-time and commission-based loan officers who do not who helps to generate the loans and also get payments on commission. My experience falls into the finance space and also product management, and while my colleague here, my co-founder, falls into the IT space, whereby he's helping with he has built the US design. We have also gotten a contract to build the fund, the app itself to automate the process for KYC, for direct debits and the rest. And the $1,000 will be going to as a seed contribution to the $4,000 we require to build out the first MVP of the app. Thank you very much.